Banking stocks are on fire right now, and I am seeing a strong opportunity that you don't want to miss out on. In this video, I'm going to show you one red hot banking ETF that is likely to take off very soon. And I'm also going to show you two hidden banking stocks that have great fundamentals and also a great potential to take off in the next coming weeks. At the end of the video, I'll compare those two stocks and I'm going to show you which is going to be the best and which one I would choose if I wanted to make the biggest return. As we all know, the stock market moves very quickly. That's why I'm posting this video today, and it's important that you watch all of it. But before getting into the ETFs and the hidden banking stock that are likely to move, if you want to learn how to trade and invest, or you're very busy for the stock market and you don't have time to look through the stock market, or you just want to learn new trading ideas, then you should sign up for my newsletter where I'll be sharing stock tips on companies that are likely to move very soon. And I will also be sharing very helpful stock market lessons for beginners so that you can start growing your wealth today. So check out the link in the description and sign up for that newsletter. And also don't forget to like this video for the algorithm and subscribe to the channel for more content like this. The first thing that we have to check to know that a company is going up is the industry or the sector that it is in, because the industry dictates 50% of the stock moves. If we go into our TC 2000, type in a banking stock, we can see that banking stocks have been sitting for a long time. They moved in November last year, and then since then, they have not been moving. They've just been going nowhere. So we can see that the industry is now looking like it's having an uptrend. This is the industry chart, and this is the stock chart. So whenever the industry is going up, the stock starts to go up. When the industry is going down and suffering, the stock just goes nowhere. You can already see that. Right now, the industry has finished its downtrend, and it has a higher low than it had last time. And then it does an upturn, as we can see, and it's starting to move up. That means banking stocks are looking very strong. Now that we already know that the industry is moving, then we can go back into our trading view and look at that ETF. That ETF is BNKU. This is big banks index, so it's 3 times leveraged. But since banks don't move a lot, most banks have an average true range of about 2% per day. That's why I like this times 3 leveraged ETFs. The first thing that we want to do is to look at the weekly chart. And what are we seeing over there? We can see something called an ascending base. This is a very strong signal in the stock market. An ascending base is when there are 3 bases or 3 big consolidations that sit on each other. Basically, the stock is coiling and just can't wait to explode. So we can see here BNKU, which represents the big banks, comes and forms this consolidation, right? And then forms this consolidation, and then forms this third consolidation. Now, these are 3 consolidations right next to each other, and they're sitting on each other. 3 higher highs, 3 higher lows, right? And then we can see that right now, as it is bottoming, the volume on the up wicks is very strong, and the volume on the down wicks was a bit weaker. So that is a very good sign. And another sign that I'm really liking is this white candle. So this is an indicator that I put here. The white candle is something called a pocket pivot volume. So it just means that day the volume was greater than any volume in the last 10 days that was a red day. And also the candle must have closed in the upper half of a candle. In layman's terms, this is a very strong move and shows that they're very strong bullish people. To predict a stock price, I normally use average true range, which is 6.6%. So I put in 6.6%. And then I know that it will move at least 3 times that. So the first goal will be at 20% move, which is a good return. The next goal always is at 5 and 6. So I'll say around 5, which is 35% move. We shouldn't get so excited. Banking stocks don't move so much. So this looks like a good guess of where the stock or this ETF should go. And where would I buy this? I would buy it as soon as it goes above the high of this candle. That's why I have an alert. I'm waiting for it tomorrow on Monday. If it goes above that, I will get it. And where will I put my stop? I'll put it right below that low of the day. So I'll have around a 5% stop loss and maybe a potential gain of 30%. So that's a 6-to-1 reward ratio. And I think that's a good return in case this stock starts to move. If this stock moves about 6% in your favor, raise your stop and bring it to about 3% so that you have a very tight stop and a huge potential for profit. Now, onto the stocks that I like very much. The first stock is NU. The banking stock had not yet formed new all-time highs, but this stock is forming a new all-time high. That's the first thing that I really like about it. So you can see here on the weekly chart, this was its IPO high around $12, and it just broke above that price range, and it did that on very strong volume. This is a very strong signal. The other strong signal is look at the earnings. These earnings are very beautiful. If you see earnings per share over the last 4 quarters, that is in this table. If you see anything above 30%, that is great. But this company is doing 163, 200. These are companies that are growing like crazy. This is a growth stock. That is a banking stock. And not only that, the revenue is also growing because sometimes companies can lie about their profits. Maybe they might lay off people, but they're not selling as much product. So they will have little revenue, but huge profits. But this company, the revenue is also growing. So it is selling more products. And if we look at the return on equity, it is just beautiful. The return on equity is 18%. Anything above 17% is great. So we can see here, it is basically forming a cup and handle. I'll show you what that is. It comes here, forms this cup, and then forms this handle. And then what is really interesting is that, by the way, this is the weekly chart, 4-day chart. You always want to look at the chart in 4-to-1 ratio. You see the volume, you can see some very tight closes here, right? The wicks have very tight closes. The volume on those tight closes is lower. And then the volume on the breakout is high. This is a very good option. I love the breakout. We draw a line here. The stock has broken out already, and it is perfect to buy. It has not yet escaped at a point where you can't easily get it. Where will the stop be? This one I would keep a very tight stop of about just 4%. So if you put in $1,000, the most you're likely to lose is about 4%. And for such a strong stock, I would think it's going to do 6 times. To predict the price, I normally get 1.5 times average true range of the last 14 days. So I just have a small table that shows me that here. Because you don't have time to really calculate these numbers, it should all be easy on the charts. I'd get 0.68. First target would be about 3 times that value. So my first target is around $10. The second target for such a strong stop would be about 6 times, 5 to 6 times. So another target would be about 30%. Of course, we can't expect something huge from a bank stock, but 30% is a good move in case this move is to materialize. So if you have $1,000, likely to get $300 while risking $40. I think that's a very good move. Any chance I get, I would take that trade. The other company that I like very much is this company called AX. I love this stock called AX. First thing, look at the earnings. What are the earnings saying? Because we don't want to buy bad companies. We want to buy the best of the best. Look at the revenue, 40% growth. You see revenue that's above 15% over the last 4 quarters, and I'm talking about year-over-year revenue, not quarter-over-quarter. So year-over-year means comparing this quarter to the same quarter last year. So we can see 40%, 38%, 58%, 78%. Man, those are beautiful numbers. Revenue, I told you anything above 30% for the last 4 quarters, 40%. That is beautiful. It got that. Return on equity is looking fantastic as well. It's above 17, which is really good. For me, above 15 and above, sweet. And now, this is a bit of a tricky stock for traders. But I'll show you the hidden signals. Now, if we look at the base that is forming here, it's a bit counterintuitive because it looked like it is having this really volatile action. But these are normally price manipulators trying to shake people out of a good stock. So we can see that it forms a consolidation here in the weekly chart, and then it goes up for a while, and then it fails. But you see this candle here, it is a red candle. But the interesting thing is that it closed in the upper half of a candle on very strong volume. That means that it was most likely a fake out. So they faked out people here so that it can shake out the weak hands of people who don't really believe in the stock. So they shook them out. And this is an old Livermore trick where if a stock has a checkout like this, you just count $3 from the previous low. So you could buy it at $3 from $49, let me say. So that's $52. So here was a good time to enter the stock, $52. But it has also not yet escaped. So we can see here checkouts. Checkouts are very strong signals because the price manipulators, they like to check out the weak hands so that they can get the whole stock for themselves. So I think that's what they're trying to do here. So they check out and then the stock comes back up. So we can see that checks out the weak hands, goes up. The only thing that I don't like about this stock is that if you look at the long-term chart, there is a very strong resistance over here. This is a multi-year resistance. That's why it actually failed here at $62 because you can see that in 2021, this was the high of the stock. It failed twice already. 2021, you can see, failed here 61, 62. Came back 62, failed. Tries again 3 years later, boom. There are so many sellers waiting at that price level. So we have to wait and see. Is it going to jump through 62? If it jumps through 62, this thing is great. So right now, this is my second option. The other one, NU, was my first option. If I was to buy this thing, which I wouldn't because we already have two great options. We have the BNQ ETF and the NU stock. This would literally be a third option. I would say do not really buy this thing, but watch it closely because if it jumps above 62, oh boy, it's going to be beautiful. So risk can be about $3.6. If you want to play it very quickly, go in for that 9% because it's likely to fail at $62. If it jumps through 62, I would have to reanalyze the stock to know where the price is going to go. Please like the video and also subscribe to the channel. Check out the other videos on my channel. Thank you, and may the markets be with you.